Good morning. All right. So the market's kind of boring, just keeps going up. Anyway, yes, thank God it's Friday, Alex. I'm kind of worn out with this cold. But, anyway, um, trends up in multiple time frames. How high will it go? Well, whole numbers are a reference point, of course. So we'll see. And the easiest thing to do is to just follow the trend. And the way we do it is so simple. Just simply looking to the left, look at prior swing lows. And if it's making higher highs and higher lows, just simply the trend continues until it doesn't. Of course, we look at that in multiple time frames, and the smaller time frames are going to violate the trend before the higher time frames. So, starting with the weekly chart here, while this isn't a swing low, it's a big bar, which tells us for sure it's going to be a swing low in a lower time frame. So while we look at swing lows, and you can see this move up that started in October, it's only got one prior swing low prior to the higher high. And that is a indication or fact that the trend is strong, meaning when it doesn't pivot, it's a strong trend. And we've only got one pivot here, so that's our major support. So now that we've got a wide range bar on the weekly time frame, that's a strong reference point as well, because you can see that it took out those prior two lows there. So it's a correction bar, right? It's not a pivot. Won't be a pivot unless, well, this will never be a pivot because this is a lower low to the left here. That being said, it's a big bar that took out those two lows. So common sense tells us it's going to be a strong reference point in this time frame. And that would be applicable to any time frame that you're looking at. Meaning if you were to look at this chart or this structure of bars on an hourly chart, the interpretation would be the same. It would just be lesser of a, indication of a trend change, meaning a smaller time frame. The same thing if we went all the way down to a 5-minute chart, the interpretation would be the same, but the break of that low on a 5-minute chart would be less significant, of course. And if the hourly and the daily are in an uptrend, that would probably be a buying opportunity at some point on the pullback of the 5. So we got a pretty significant reference point here on the weekly, which is the low of this bar, this big wide range bar. And of course, we're looking at the futures here. The spiders won't look exactly the same. So momentum slowed a little bit yesterday from the range expansion bar. That's normal. We'll see what today brings. But that jobs report news that was hyped up as big thing, really not much happened. Right? It just kind of wiggled around here. And on the 15-minute chart, it did get a break of a trend. I don't have the pivots marked here, but that is a swing low. So beginning of a sideways trend here on the smaller time frame. And you can see that's what's going on here on the hourly there, but still in an uptrend. Let's go to the spiders. So we've got this gap down reversal. We got the wider bar on the weekly there. And so same story. And a little sideways move going on here. Pre-market trends are up. And so now we got a swing low here on the spiders. And so a break of this low would be a violation of the uptrend. And ideally that would be on a closing basis. It hasn't happened. And this correction that started when we got the signal from the internals on this day turned out to be a little sideways correction. And now it's made a higher high yesterday. This becomes major support. And that's just what we call the factory work. And while technical analysis has a lot of gray areas to it, this is black and white, meaning higher highs and higher lows. This becomes major support. A violation of that low breaks the trend, black and white. And so until that happens, the assumption is that in this time frame, it continues to go higher. Right? The more simplicity we can bring to our analysis, the more consistency and the easier it is to make trading decisions. Qs, same story, uptrend, same bar, range expansion, same analysis. YM, same analysis. And while this has shown a little bit of relative weakness, still the trend is up and got a little stall here at the whole number. So unless it violates, let's take it a little to a lower analysis on the daily chart. So our first reference point of support is the prior bar's low. So, and we take it maybe a little closer. It's not a range expansion bar, a wide range bar, but the deeper, common sense tells us the deeper it retraces into that bar and can close into it, the weaker the current day has been, right? So we always try and bring common sense to what we do in our analysis. It doesn't have to be complicated with indicators and trend lines and so on and so forth. So a little common sense goes a long way. This what we do here. So a break or close below yesterday's low would be a beginning of a short-term correction. One red bar doesn't change the trend, of course, but as you can see here, one red bar led to a couple of days of correction. This one led to, a downward move and reverse back up again. Okay, Dan, a request to look at GLUU when you come on. So backing off from the 29,000 level there, right? That's, these whole number reference points do come into play as psychological levels. But prior day's low is our next significant reference point. And ideally, well, you can go to the hourly here and you can see a little base there that in the hourly time frame, we want to see the trend continue up to be as bullish as possible, even intraday. Excuse me. Russell, deeper correction, wide bar, consolidation, sideways up here. Weekly chart looks just fine, right? Not as strong. We know that on the ETF, the old high is further away. But while this has gotten kind of wild and whippy here with tails and overlapping bars, and when that happens, generally what we do is, and the next step in the thought process is to condense the data, go to the higher time frame and see if that brings clarity. And it does. It's just a nice uptrend. It's correcting here. There's buyers on dips. And now we wait to see next week if it can break above a prior week's high. And that would signal a move to the upside with a stop below the prior week's low. All right. Qs. Right. Gap up, where are we here? 219-ish and a half. So we're about yesterday's high there. So again, starting off neutral here this morning. We'll see where it goes. Russell, right. Just looking at the prior high is up there at 173-ish. Still got room to go. Transports, still a mess, but improving. And for the moment, assuming this bar closes like this, that leads us to believe that the transports are going to bring up the rear next week if they can take out at least this week's high to start. And if it does that, that should push up toward 200. And the transports, again, assuming that happens, this chart suggesting that it's going to bottoming tail correction, so a downside shakeout there. This bar this week took out last week's low and reversed up. So a correction bar, and the transports, again, assuming this can clear 200 next week, are going to bring up the rear, and the transportation stocks should be the place to be next week as the transports, as I said, bring up the rear. And oil. Right. still correcting a bit, coming down to some support, came to the top of the range, right? Just normal. Well, that's a big bar. So normal reaction to the top of the range, but a pretty powerful reaction. So we'll see where that goes next week. Bonds up a little bit here, just pretty much a mess, whipsawing around. There are some support, so we'll see what happens next week. Gold, correcting a bit as anticipated after that big reversal day. And silver, same story there. So it'll take a little time for this to calm down and, see if it holds here. If not, it comes down probably to this level. And then we'll see if it begins to settle down. Trends are up. Gold looks, it's a cleaner chart, obviously, with the multi-year breakout that occurred and the pullback to support and now the higher high. And this becomes our major support level right here. And so while this, again, big wide range topping tail bar creates a lot of uncertainty, we just need to see it calm down and begin to get turned around. So I'll just bring my alert back up here, see if it comes down there, which should be a buying opportunity. And what time is it? Maybe I went too fast, Dan. You have a lot to cover, but the markets are up. So, there's very little analysis to do when you have multiple time frames that are trending higher. And the assumption is that it'll continue until something changes. And it'll change sooner in a smaller time frame. And as an intraday trader, we pay attention to those smaller time frames. As swing traders, going down to those smaller time frames is really a detriment. You can get wiggled out of trades that are good trades. So that's it for me. Have a great weekend. For those of you on YouTube listening, our audience there, thanks for participating, and we'll talk next week.
All righty. This was on the bottom right here, Greg's Coffee Shop. I actually was hoping that was going to gap up today. I mean, it did. It was up. I saw it on the ticker. It was up $1.75 or something. So this now looks like a day trade short, and this is 0 DTE Friday. Hey, McGraw, I think that would be a great license plate for your Winnebago. 0 DTE Friday, but that's too long. So just go with 0 DTE. And this one's juicy. So let's see if we can get off a 46 naked, or, similar that we do for the spiders or SPX or anything on 0 DTE day. The only reason to do a spread, because you're having to pay 2 commissions, is just buying power consumption. So on spiders, I just say, just look at your quote screen and only pay a penny. And that will dictate how long you go. Yeah, there you go, Lewis. Yeah, that's shorter than, I like that. I mean, McGraw would be a good one too. Either McGraw, but yeah, Dr. DTE 0. And then you'll have people stopping you all the time at the stoplight and the Starbucks saying, sir, it's obvious that was customized. Do you mind telling me what the heck that means? And there you go. You'll have women hitting on you every day, McGraw. All right, Flyman, you know what to bring me home from CTG. All right, let's continue here. Opens, let's see if it's real. Yeah, we got a print up here on Mealy. Mealy, we still have a third lot. What a beautiful, beautiful 1, 2, 3 that was. Look at that, just right out. We still use the word textbook, but I don't think they're textbooks anymore. Right out of the swing trading course and our 1, 2, 3 MT Live. Wow, that's beautiful. Qs were also, Qs is the strongest pre-market here. It's up the most. And we're gapping up. So let me, I guess there's starters here. I'm going to tighten the stop here. We have a bull call debit spread. Give me a second. 218.47. All right, 10. And, you know, we also talk about when we swing trade. I prefer swing trading options over stock, like for this reason. We have a bull call debit, we had positive theta, and we get fantastic return on capital for the capital outlay. Everything else looks fine in our opens. You know, I'm only, well, actually CMG, I'm showing up $7. All right, cool, cool. Hey, do y'all remember to the close, we had a very objective analysis of what to do with this? You know, we had a put spread, it topping tail, but it still held support. We said, hopefully this 15-minute will be the low of the day. And now it's gapping up, so good, good. Yeah, we questioned, and I said I needed more information before I put a condor on because it's still a strong uptrend at all-time highs. So that was my caution of a condor. McGraw, yeah, we have a Netflix put spread, and it's right at the 50% retracement, but this is still an overall very bullish. This was a bull 1, 2, 3, rising 20, 50. I wouldn't add to it, but you know, it's holding here. You got to retest back up, and it's not a directional, but yeah, no changes on that. All right, YouTube. Let's go to gappers now. YouTube asked about glue. Had a breakout failure, greater than 100% retracement, slicing through these two major pivots. Small gap up today. It's, you know, you're just swimming upstream. It could be a day trade over a 5-minute high, but your target's not real big. It's just not a compelling setup for us to do anything on. Yeah, I have 6 in my gap list. Let me just start plowing through these. PLMR, let's see, 48.40. So it's a bearish gap, but no pattern. And again, I'm looking for tier 1 setups. So compelling pattern. And like this one, I gave this officially yesterday. And I said, buy it today over yesterday's high. And, you know, some people got in early into the close yesterday, which was totally fine. And they're getting rewarded for that early decision. Like McGraw, like Dr. 0DTE. I mean, no disrespect, but that having to say doctor every time, that's just too many words. So I'm going to stick with McGraw. Has a nice little ring to it. All right, so this one I like from yesterday, ATH. I like over the high. So these are tier 1s. They're ready to go. The market's fine. These are fine on multiple time frames. And I had IEX. This is ready to go over the high. So that these are 3 tier 1 setups. But now the list pretty much that I'm looking for any tier 1 setup. So I look at the FANGs, I look at the broader markets, I look at our list from leftover, but you know, we like trading gaps too. $16, we gap them way down here. It's not tier 1 because I don't know what to do with it. Florida, 37.7. Hey, they were talking about Florida. There's an article in the journal today that said the average, if you make 5 million bucks in New York and you move to Florida with no state sales tax, you save, and I forget the exact number, but it was like you save $390,000 a year. And that's obviously why we're having a number of high-tax states, California, New York, New Jersey. They're saying enough's enough. I don't blame them. Take those, take your taxes and, put them where the sun don't shine, is what the saying is. 37.85, it's a bearish gap, but similar, I don't know if Flyman took off already, but similar to this KSS where it had multiple levels of weekly support. That's what concerns me on FL also, and it's looks like it's giving its sea legs back here at pre-market. Here's the 6. 6, 36 bucks. It's a very bearish gap. Wow. When you gotta go look at your monthly chart, it's topping. Hey, you know what? A quick story. When I was in Dallas, talking to my dad, and my dad said, "Hey, why don't we just buy high dividend stocks?" And so we did a little Google search, and this was on the list. And I just showed my dad pictures of the charts. And I said, look, it's not like walking up to a bank vault and you're going to get paid that. You still have the risk of the underlying. So I'm going to send him this chart on the gap down. Say, look, Dad, this is exactly what I told you. You make your 3, 4, whatever % dividend they promised. And guess what? You're now down 10% on the underlying. So how do you feel about that, Matt? But no, the gap's too excessive. Nothing to do with 6 for now. See, so this was, a short-term bottom, but this would be something like I would tell you you're swimming upstream because it's still in a downtrend. 1451. Also, if you go to the monthly chart, that's getting its head taken off. Workday. The reason I'm showing you this one is I'm on some option newsletter service. I didn't sign up for it. I'm sure, my participation in webinars and the email swaps is how you get on some of these lists. And so this option expert sent this out as a new bullish option trade right now, as a directional. So for any of you that have taken Greg's course, that have listened to us, that can look at that, and you can ask an 8-year-old, hey, just tell them over breakfast, hey, don't buy anything that's up multiple green bars in a row, far from this blue line. So now come look at this chart, Paul, John, whatever. Would you buy this? No, Dad, you just told me. This thing's up 1, 2, 3, 4, 5, 6, 7 green bars. And I'm not even getting into resistance or slowing momentum bars. But that's just a crazy, 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 crazy place to put on a bullish directional on this. I shouldn't get annoyed. Actually, Greg mentioned it on this day. And I did too. I mentioned it on this day as a put spread, the gap reversal engulfing. I mentioned it here. Greg, the following day in the morning, mentioned this one, and I think it was now, something like that. No, it wasn't now. I'd rather buy now than workday, because look, this one consolidated, and that's more controlled. So even though this one is up a number of green bars, entering this one superior over workday. So this McGraw, let's put this on as a put spread watch. That looks great. Oh, this the reason I was put IYT here is because when Greg mentioned that this is typically has pretty good options use, typically. So this, you know, it's up 3 bars at the top of the range, but let's put that on your homework list. See if we can get a put spread on that for next week, or it's monthly, so whenever the monthly expiration is. And I'll look at the calendar. Yeah, next month is, I'm sorry, next Friday is the 3rd Friday. So yeah, there'll be weeklies on that. IYT. Boeing, we entered a put spread on this day, Jan 7. It went against us. And then I closed it at the dead high yesterday. I just came back from lunch. I saw this thing ripping. I said, close it. And then I said, I am not messing with you anymore. But yeah, you know, back to that guy on workday saying it's a bullish entry. I guess it's, you know, I feel bad when people get led to the slaughter, but we actually get a lot of our new subscribers that way, that they come to us and they say the same thing over and over again. I'm tired of listening to crap and losing money and not learning anything. I'm so, you know, I wish I met you all 10, 20 years ago. TGNA. I don't like the daily at all. The monthly is actually a breakout, but what I do like, if this is real, I don't see, you know, much volume, so it's hard to tell. If this genuinely is a gap reversal like this, then I love gap reversals with a price void. So on the 15-minute chart, this could be a day trade, you know, up to this resistance. But if that were a daily chart, I love those patterns. NOW, approaching resistance. Yeah, no, it'd be a swing trade. And you know, it's not a core trade to me. Yes, there's weekly resistance, but that's a year ago. So on my daily chart, I see nothing to the left. So no, that doesn't bother me at all. This resistance on the weekly for a daily swing trade, irrelevant to me. Does that make sense? Just hypothetically, let's look at these 2 bars. This resistance would be very important to me. And I would tell McGraw and others, let it go sideways. It needs to consolidate. And that's exactly what it did. Look, then you had 3 inside bars. That was your entry day right there. It gapped up and broke out. So this was not, you know, you never know. There's not a formula where you can say, well, did it nullify at 100%, 90%? It's all the master trader concepts. And that was your entry day. Wow, the time snuck up on me. This is gapping too big. I have no interest. This trade's too spotty, and the target's not very big. Grub got whacked. No pattern. SWKS, I don't know, was mentioned. And Cuervo, these are some suppliers, but no patterns. Suppliers of Apple stuff. Nasty gap down. That must be a bio ISRG.